Hey there, everybody. Thomas Wood with Basecamp Trading. It is Thursday, August 3rd, and we're going to continue on with our Mistakes Traders Make series, and we're going to discuss blowing up trading accounts, because this is something that happens to traders no matter where they're at. I've seen it happen with people trading multi-million-dollar accounts that are professional traders. I've seen it happen with traders trading $5,000, $10,000 accounts. So it's an important topic to talk about. Now, one of the biggest things that happens when traders blow up an account, and what I mean by blow up an account is you'll be having a really good day, or a really good week or month or year, and then all of a sudden you have one really big down day, a drastic drawdown. You erase all those gains and some. Or you might take 10 steps forward, then in one day take, or in 2 days or in a week, take 10 steps backwards, or 7 steps backwards, or 20 steps backwards. Okay, so it's having those really big losses that just come in and wipe out everything. And that happens to a lot of traders. So this is kind of going back, tying into another video I made previously about discipline. And one of the number one things I always tell traders is I've never seen a trader that has been around for a long time. I've seen people that have made it short term, but never long-term traders that are not disciplined. All right. And you have to have that discipline with your trading. And there has to be an uncle point. You need to have a plan that you are following and rules that you're following before you get into the trading day. Because once you start trading and you're in the markets and the markets are moving and money's going in and out, and you see your account value going up and down, or your trade going up and down, the emotions start kicking in. So before you start trading, you should have a plan in place. And one of the big parts of that plan should be, where's your uncle point? When is enough enough? When do you pull the plug and say, okay, I'm done for today, or I'm done for the week, or I'm done for the month even, and then come back and live trade another day? So if you think about it, the biggest thing that can go wrong with your trading is you lose all your money, unless you somehow lose more than your money, which is possible with margin or with leverage. But we're just going to say the worst thing that can happen is you lose all your money, because then you can no longer trade and there's no hope left. All right. So how do we protect ourselves from doing that? And you'll have to decide this for yourself, because each trader has their own trading personality, is what we like to say. But some traders might be willing, okay, I'm going to risk 2% of my account value on any trade, or 1% of my account value on any trade, or 5% of my account value on any week or month. Okay. And when you hit that number, whatever that line in the sand is, where you say, I'm done, you have to have the discipline to actually stop. I always tell people one of the worst things that can happen to a new trader is they have these rules in place, they hit their loss limit, and they go, you know what, I'm just going to do one more trade. And they start trying to dig themselves out, and they actually end up being successful at digging themselves out of that hole. Because then they come in with the mindset next time that, oh, well, I hit my loss limit, but hey, I can just place a couple more trades and dig right back out of this loss and turn it into a winning day. And the problem is, all it takes is one day for it to go drastically south, and you start trying to dig yourself out of that hole, and instead of getting back out of it or climbing back out of that hole, you end up going deeper and deeper and deeper. Instead of having a day where you could have had a $1,000 or a $2,000 loss, you end up with a $10,000 or $15,000 loss. All right. So when you have that limit, once you establish what that limit is, that number, that line in the sand, stick with it, period. And you should come up with this number outside of trading hours, when you're not emotionally involved in the markets, when you're thinking clearly. All right. And then take that number and stick it on a notepad or a sticky note right underneath your computer screen, so you see it all the time. And you know, if that number is hit, you stop. All right. There is nothing wrong with having a losing trade. There's nothing wrong with having a losing day or week or month. There is something wrong with blowing up your account because you don't have the discipline to stop trading. Okay. So keep that in mind. Discipline. Number one, you got to have discipline. And number two, you got to have a plan that you created outside of trading hours, when you're not emotionally involved in the market, when you're thinking clearly, that tells you and outlines when exactly that line in the sand is that you stop trading and pull the plug and say, okay, enough's enough. All right. I hope that helps. Hope you're enjoying this series. Help us get to 20,000 subscribers if you can. If you're enjoying it, click that subscribe button, click the like button. I'll see you in the next video. And until next time, happy trading.